Apartment occupancy rates have bounced back in Fresno, but rent growth is still very, very mild, and that's just reflecting the economic troubles still plaguing this market. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Fresno update. Fresno remains a very troubled economy. Unemployment here is at 16.2%, and it's been in that range pretty consistently over the past 3 years. But in spite of that, apartment occupancy rates have been steadily climbing. As you can see from this chart here, up 0.6 points in 2011, up to a rate of 95.3%. And take a look at this chart showing occupancy by product age group. And you can see that like many parts of the country, vacancies are fewer in the top end, occupancy rates of 96% or better in apartments from the 2000s, 1990s, and 1980s, but a few points below that for apartments built in the 70s and earlier. Among submarkets, really only one weak spot, that's the East Fresno University area. They have a lot of 1970s era apartments there. Occupancy is at 93.2%. Everywhere else we're above 95%. In the upper end Woodward Park area, as usual, leads with an occupancy rate of 96.9%. So overall, occupancy rates are looking pretty good, but rent growth levels are still quite weak relative to what you'd expect to see with occupancy rates above 95%. Same-store rents inched down 0.5% in Q4. They did climb 2.7% year over year. Again, not much, but about what you'd expect to see given the unemployment's at 16%. There's just a ceiling for how far you could push rents when unemployment is that high. On a submarket level, mild to moderate growth throughout. Interestingly, Woodward Park, which had the best occupancy rate, they had the lowest rent growth figure at 0.7%. Clovis and Sunnyside, Southeast Fresno were on top, both around 4% growth. Looking ahead, it's a question mark whether Fresno could maintain occupancy rates above 95%. Fresno is a market that could lose some apartment renters to single-family home rentals as the government starts its program to turn foreclosed homes into rental homes over the next couple of years. Certainly not a big factor we expect in most parts of the country, but in markets in the Valley of California where the economy is weak and foreclosures have been a big problem, it's certainly something that could be a big factor. And even if apartments are able to maintain decent occupancy rates, they probably won't be able to achieve much rent growth at all, given the economic troubles, and also given the fact that with all these foreclosed homes coming into rentals, it's going to be pretty tough to compete on the pricing side. So that wraps up for Fresno. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.